All right, guys, good morning, good afternoon, whatever time you're watching this. I'm Sean Fector, head of sales for HouseMax Funding. I am here with Aubrey Kozer. Aside from having the best pigtails in hard money lending, she's a VP of lending for HouseMax, one of the top LOs in the country, a true gift to work side by side with every day. And Nick Hunt, one of the rising star account executives at HouseMax, just about to finish his first year and creeping up the leaderboard. And excited to have you guys here with us today. And just we're going to talk a little DSCR. We're going to talk a little fix and flip. We're going to talk a little bit about Aubrey's first flip that she's doing.
Oh, yeah.
And I think just get into what makes HouseMax different and how can we add value to the investors from all walks of life that we work with on a daily basis. So let's jump right in.
Excited. Let's do it.
All right, perfect. There's a ton of buzz right now around DSCR and a lot of investors taking advantage of the recent drops in rates and looking to refinance. But I think there are a lot of investors that own a rental property, own a couple rental properties. This isn't something that they do full time. Mm-hmm. Maybe explain to them, Aubrey, what is in simplest terms, what is a DSCR loan? How is it different from a conventional refinance that somebody might do on a rental property?
Yeah, DSCR in its simplest terms is debt to service income ratio, which is different than conventional lending and taking out a conventional loan because it doesn't report directly to your credit bureau and doesn't affect your debt to income. And we're purely looking at the asset from a cash flow perspective. How well does that property support your potential mortgage? So that can really benefit people for a number of reasons because they're not having to put up their income or tax returns. And it's really just like, is this a good performing asset based off of market rent? And really opens up a ton of opportunity for them to have something that cash flows really well.
Yeah, perfect. So Nick, there's a lot of buzz out there right now amongst real estate investors around DSCR loans. Rates are dropping. I was looking at the numbers this morning. I think we put 25 or 26 new DSCR loans in process just yesterday. Mm-hmm. It's blowing up right now. Mm-hmm. What are some of the reasons, Nick, that you think this is such a great time for investors to take advantage of a DSCR loan?
I think with where we are in the year, there are a lot of investors who are looking both at cash flowing assets or the ability to kind of take cash out of current assets that they have to kind of roll into fixing, flipping, or some other real estate ventures in the coming fall. And so I think taking advantage of some of those low rates, as well as kind of preparing for the chaos of the fix and flip market that's soon to come, is kind of the time and the reason why a lot of investors are taking and striking now with some of our DSCR rates we're offering.
Yeah, excellent. I've been traveling almost weekly. It seems like I've gone to, one of my favorite things to do is to go meet investors. And I've been traveling almost weekly. I know, Aubrey, you've been taking a lot of trips as well. Mm-hmm. I've been in Atlanta and Charlotte, Seattle, San Diego, Denver, cities. Right? Yeah. Great cities. And I'm meeting with investors and I'm seeing a shift. A lot of them that right, they would do 10 a year and I'm gonna sell 7 and I'm gonna hold 3. I'm starting to see a lot more and have a lot more conversations now of the opposite. Is, hey, we're having to sit on properties a little longer before we can sell. I'm going to hold 70%. I'm going to flip 30. Aubrey, are you having the same types of conversations and seeing the same type of thing with some of your investors?
Yeah, definitely. I think the super high level folks that I have are being more cautious with the deals that they do decide to take down. They're looking for bigger margins, or they're probably passing. And then a lot of folks who are maybe not as high volume are looking at the asset, they really love it, and they're like, hey, rates are supportive enough to make this a cash flowing asset. Even if it's not for, the next decade or two, for the next, 5 years, they could see them holding that property. So I'm working a lot of people out of their current hard money loans into something semi-permanent or, definitely permanent.
Yeah. Nick, in the conversations that I've been traveling and meeting investors in multiple cities, almost weekly it seems like over the last several months, I'm having a lot of conversations around investors that are now holding properties once they're rehabbed as opposed to flipping them. I know you work with some guys in Texas and California. Are you starting with the high level volume flippers and investors that you work with, are you starting to see the same type of shift of more moving into long-term debt once the rehab is finished versus putting it on the market?
I think so. I think there are a lot of investors who are starting to see some of the writing on the wall and find value in holding properties for a little bit longer as opposed to selling them. I think there's also a ton of tax advantage with holding properties and pulling cash out as opposed to selling them and having to kind of tackle the tax man. And so as we see these investors start to be a little bit more flexible with their exits, we're just here to kind of be lenders as well as consultants and just kind of provide some information that will kind of help them make their decision. And so whether people are looking to sell or refinance, we're kind of here to be the cash opportunity and kind of help them get through it.
Disclaimer, HouseMax does not condone anybody actually tackling the tax man.
Or you're going to lose.
We don't want to do that.
There's no way to make it.
I don't recommend tackling the IRS agent if they come knocking on your door. Nick and Aubrey, given the high volume of DSCR loans that we've been doing at HouseMax over the last several weeks, in fact, I think we put 25 or 26 new DSCR loans in process just yesterday, which is great. And I think we'll continue to see that kind of volume. As borrowers start reaching out to HouseMax and reaching out to one of you guys, what kind of rates can they expect to see? What have you been seeing with the borrowers that you've been working with? Because you both have done several in the past week.
Yeah, the kind of rates that I'm seeing right now for new DSCR quotes that I'm putting in probably range anywhere from as low as, I've gotten some 5.5s up to 6.5%. And I really love the flexibility of our product because you could go really a no point option if you really wanted to. Like you have the ability to kind of create your choose your own adventure, if you will, with
choose your own ending.
with the DSCR product. So, but the 5s is like outstanding. We haven't seen that in quite some time, and that's making a huge difference in the overall outlook of cash flow for a borrower.
Yeah. Nick?
The kind of rates that I'm seeing for the borrowers that work with me are hovering in the 5.5s, 5.7s, 5.9s as well. And I really like our product because you're able to be super flexible and lean more toward max leverage, lower down payment, kind of best rate. And so we're able to kind of curtail to whatever the borrower is biggest pain point.
That's one of the great things about the HouseMax DSCR product is you guys as loan originators are able to send your borrowers a link and they can go in and what we would call size their own deal. I want higher or lower leverage, and that's going to drive an adjustment in rate. Right. I want to pay higher origination fee to get a lower rate because I'm going to hold this for a long time. Or I want to pay a lower origination and a little bit higher rate because I might not be in this as long. So I love that ability, Aubrey, as you said, to choose your own ending. I love that ability for borrowers to go in and actually create 2 or 3 different scenarios and view those side by side and choose the one that best fits their needs.
Right, yeah.
Aubrey, you said something earlier that I love because I think you stole the line from me, which was iDSCR really gives our investors the ability to choose their own ending. How does that empower the investors that you work with?
I think it comes down to some of that like full transparency piece. When you have the ability to choose your own ending, you're looking exactly at what leverage does to rate, where you can take the points, and it's kind of cutting out that like, is this real, is this not? Like you can see in real time in less than 2 minutes what your entire quote looks like and what the process is going to look like going forward. So if those metrics hit, that pricing sticks. So I think it's great.
Great.
I think it gives them the ability to decide fully what is important to them and to use that to be the strong step that they use to step forward, right? So if they're really concerned about leverage, that can be the thing that they lean on the most as opposed to rate or lower down payment. But I think it just saves the borrower a ton of time. There's no going back and forth, hey, can you give me this term sheet? Can you show me this? It's just, well, this is what I want. I'm able to toggle that and decide that to be the leading factor in what kind of the product is that I use.
Yeah, kind of the traditional process for most hard money lenders and a borrower when it comes to DSCR was a lot of back and forth, a lot of conversations initially with the LO discussions, and you really, as an investor, you've got to be on their time. Well, what we found is, and I think one of the first iDSCR loans that we had come in was at 2:13 a.m. It was just like what we envisioned. It's these investors sitting up when they had time to finally stop, take a deep breath, and do some of the busy work that self-service sizer that you guys are able to provide your borrowers allows them to do the business side of flipping on their own time. So guys, I mentioned earlier we had 26 DSCR loans go in process just yesterday. And if you go back and you look at all 26 of them, there are investors in there that own 2 rental properties, and one of them is actually a 96 property portfolio DSCR. So we're seeing investors from all range of experience, liquidity, that are getting in and taking advantage of the HouseMax DSCR program. Nick, how does a program like the HouseMax DSCR help that brand new rental property owner and equally somebody that owns 200 doors?
Well, I think there's kind of 2 ways to look at it. I think for the seasoned investor, there is the information that they need, which they've already experienced, to make the best decision that benefits them. And I think for the new investor, there may be some things that they haven't seen yet. And so we're offering more of a learning opportunity for them to decide if the lowest down payment or the max leverage or the lowest rate is the direction they want to go. There's some other lenders who will kind of just provide them a quote and they kind of blindly go with what is offered. Here, they're able to see which path makes the most sense and then use that as a learning experience to go forward.
Yeah. Great answer, Nick. We keep talking about what I think is a very fitting term when it comes to HouseMax DSCR and the ability for that investor to go in and toggle between leverage and origination and rate to really put a package together that 100% benefits them. Aubrey, what are you seeing with your investors? 'Cause you've put a ton in. You must have put 30 in the last week. What are you seeing? Are you seeing your investors leaning more towards getting the lowest possible rate or the lowest possible origination, a marriage between the two? What are you seeing most common with your investors?
Yeah, I would say most common quotes I'm seeing for investors, it really does vary on their preference. And like Nick alluded to earlier, their pain point. Like some people are really, really fee adverse. So they would prefer, a 40, 50 more expensive dollar payment per month to avoid origination because they feel like that's cutting into the bottom line. And then conversely, people are like, I'm definitely holding this for 30 years. I don't foresee myself paying down the principal, really tremendously. So definitely rate all the way. But I think it's going to depend on how you've operated in the past, how new you are, how many other rentals you operate. So again, the flexibility of choice is like the perfect marriage here. And that's why I think we've done so many of these in the, past few weeks because rates and that, it's like match made in heaven.
Yes. Aubrey, do you have any examples of just given how insanely attractive the DSCR rates are today, do you have a story where an investor that you work with asked you to give him numbers on one property and saw the rate and said, let's do them all?
Yeah, I think it's kind of in tandem, honestly, because our bridge pricing is phenomenal. I know that's not the focus, but like it started from, hey, we've got rates at 5.5. We're talking about one project. And they're like, man, if this is what the term sheet looks like, I've got 3 others about to be done with rehab that I'd also looked at, would love to lock the rate today. And then it's like, hey, while we're at it, I've got a bridge acquisition coming up. What does that look like for you guys? So I think because we offer all of the products, the flip, the ground up, the DSCR, it's such a holistic look at everybody's book. And it's like, yeah, if you could keep it all in one place and not have to bop around lender to lender and make a bunch of calls, and that we're going to be really with it and organized and that our process is easy, I think those are the biggest wins, or people doing a lot across Burr and I guess that methodology specifically.
By the way, how many R's are there in Burr?
There's so many R's.
I'll buy lunch. I'll buy you guys lunch if you can. Someone can finally tell me what Burr is.
It's 4 R's. Yeah.
Yeah.
Right.
Yeah.
What is it, Nick?
It's buy, rehab, rent, refinance, repeat.
Yes,
Right,
that's good. That's good.
Yeah.
It's 4.
Good job. All right, I owe you guys lunch, so let's do it.
Free lunch.
Going back to carve, baby.
It's interesting when we talk about rates and where they are, and Aubrey, you hit it on the head. There really is a marriage between DSCR and bridge, because as Nick alluded to earlier, the rates are so good now that these savvy investors realize that they can go in, take cash, refinance, take cash out, and then have the additional liquidity to go. And instead of doing that one flip at a time, maybe now I can go and I can do 2 or 3 this quarter as opposed to one. And yeah. All right, Aubrey, the $1 million question.
Oh my gosh.
If you could give one piece of advice to an investor that is thinking about a DSCR loan today, what would it be?
Thinking about what factors are most important with working with HouseMax for DSCR, I think are kind of two-pronged. We care a lot about just property management, as should any investor care about property management, and just kind of the logistics of how that property is operating day to day. So if you have a property manager, we want to know kind of what that looks like, or if you're there and you're the boots on the ground, great, like how is it going, etc. And then the other thing that we're looking a lot at, because it's how well does this property cash flow, is obviously the lease, if there is one, or if not, what's market rent. And I think a lot of specifically newer investors can forget that there's market rent data out there. And specifically when we get appraisals, appraisers are going to the MLS to look at market data. And that sometimes could be a little misaligned with what you think you're going to be able to rent the property for, or what the property is leased at. It could be above market or it could be well below. So I think just having an overarching idea of what market rent is and like how does that work into your numbers and how can you back into that is super important, because if you've got this unicorn that rents for $2,000 yet market rent is $1,000, a lender, even aside from us, is probably going to go with the more conservative, the two numbers, for the hit by the bus effect, like what happens if tenant moves out. So I think looking at the whole market, taking public data, MLS specifically, is really great to consider.
So Nick, given the high volume that you're doing, you're seeing a lot of DSCR loans, right? You're touching a lot of these loans that are coming in. You're working with a ton of investors on DSCR. For someone out there today that's thinking about a DSCR loan and taking advantage of these rates, what's one piece of advice you would give them?
I would probably say to do a good job of zooming back and understanding your long-term real estate career versus what's going to happen in the next 365 days. I think there's a ton of advantage in owning rental properties, appreciation, there's tax benefits, and ability to pull cash out later. And so sometimes in real estate, we like to focus and zoom in on some of the smaller minutiae and details. Understand that rental properties are a longer play, which are going to have a way better bang for your buck down the line. And so if your goal is to use real estate to get to financial freedom, I think just make sure you're looking at it at a bigger picture piece as opposed to looking at month by month, year by year. If you have a cash flowing asset, you are already winning and putting yourself in a pretty advantageous position.
How could you not want to do a loan with this guy? Look at him, huh? Aubrey, I know you're good, but that was great.
Bring on the heat.
That was great.
Bring on the heat.
All right. So, Aubrey, big news coming out of Austin, Texas. Lady, that you have started your first flip. What
Mercy.
What made you decide to go flip a house? And tell us some great stories about how it's been going so far.
Yeah. So first flip I signed on my 2-year anniversary of being with HouseMax, which I don't know.
Right.
Feels very serendipitous and appropriate. But it was kind of a cascading effect of like working with so many high-level investors and people that I really look up to in the space that are creating financial freedom for themselves through flipping and through Burr. We're just kind of like, this is something also available to you. You have the hardest part, which is the financing. So through that and then kind of finding the right contractor partner, I was like, I think it's time to make a move. And boy, I can't tell you how enlightening it's been from just the origination standpoint and then putting it into practice.
Yeah.
Like, took out a loan from HouseMax, couldn't have been an easier process. Like, plaid, cake, getting credit pulled, cake. Like, process to close cake. The only thing that might have slowed me up is I didn't have an entity set up before, so I waited on the IRS, go figure. But that whole process, I was like, wow, okay, it is really easy to borrow money. And then getting the process going, I think the other thing that I had to consider is working with this contractor. We've got a really big rehab, so maybe a little aggressive for a first-time flipper, but the margins made more sense to do like a proper job with a more like gut rehab, if you will. But just the amount of money that you have to put out to get that machine going, I think was more than I initially anticipated. And so on a go-forward basis, I really want to advise like my sponsors and clients to be really thoughtful with their contingency and their budget and how it's set up, because you really gotta like front load the side of the project just to get things going and feed the machine. And you know, you do want to have extra liquidity set in place past the down payment, or otherwise people are going to be knocking on your door and they're going to be like, hey, where's the money? Like, when's my next payment coming in? You know, and stuff comes up. We decided we wanted a fence. It wasn't in the budget anywhere. We didn't have a contingency set in place. So I was like, okay, $8,000 for fence. Here you go. Hope it looks good. Yeah. So I think like all of those things have been great, just learning lessons where I can share that anecdotally with people that I talk with.
That's awesome. We're excited to see it.
Thanks. Yeah. We
I don't know about you, Nick. I was bummed I wasn't invited for the demo. I would love to have come over and swung a sledgehammer and knocked some walls down.
Oh yeah, it was tough to say the least. A lot stronger than I thought they were.
Yeah, he took down the chimney pretty easily though.
Sore for 4 days after. No big deal.
All right. So Aubrey, that's exciting that you're doing your first flip. Mm-hmm. What lesson already in this project have you taken away?
Yeah, I would say one of the biggest takeaways in doing my first flip is to be super mindful with the scope of work, the budget, and the contingency that you have in place. Because what I've learned is contractors want to get paid. They want to know when payment is coming. And I think you should do yourself a service with syncing up with your contractor and seeing like what steps are going to happen when, and like when they're anticipating being paid out, because you can lay out your scope and i.e. your draw to get paid out in the same cadence. And then two, the contingency is super important. I know we've got some people that are like, I don't need it, you know, whatever the case may be, but we write a non-Dutch loan. So you're only paying interest on what you've borrowed. So if you never use your contingency, like good on you, like glad you're under budget. But I had a $8,000 fence that had to go in, and it was like, do we want it to look good and have curb appeal, or do we not? It wasn't anywhere in the budget. I didn't have a contingency, so I wish I would have done that in hindsight. So I think that's a huge takeaway and something I'd advise on a go forward.
That's great. Well, Aubrey, we're excited to see the final product. What's the completion date?
We're probably about 3 weeks out.
Wow.
3 to 4 weeks out. So hoping we can like beat the holiday, and planning on having a big open house, and would love to have everybody out and have snacks and such.
And the big question, what's your exit? Are you going to hold? Or are you going to sell? Are you going to move into it? We all think you're going to move into it.
Everybody wants me to move into this house in like the biggest way. No, idea is to sell. I think that the upside is huge. I think another opportunity people could be looking at is like equity split and sharing, which is what I have going. So I don't really have to be at the project every single day, because there's another person that has the same vested interest in completion as I do. So that's something every borrower could look at. And if you're super high level, that's something that we provide is joint venture and that type of boots on the ground. So.
Well, I love that you're flipping a house. And I think that's one of the things that really sets HouseMax apart, is that the two founders of the company collectively flipped close to 3,000 homes before starting HouseMax funding. Most of the senior leadership, which is now including Aubrey, have flipped at least a home or rentals. And that's the great thing with HouseMax, right? It's not just a group of people we've got 55 people in the office in Austin and another 35 spread out around the country. We're not just people with a checkbook and a computer. Most of us have actually been out there and done the thing that we're advising on today. So congratulations
Thank
to you.
you.
We're excited to see the finished product.
Thanks, I appreciate
All
it.
right, the first of many.
Of many.
Hopefully.
And then maybe eventually she'll do the burr,
The burr.
The burn.
the 5 R's.
Five hours
or
going.
4 R's, whatever it is. All right, great job. Nick, I want to talk specifically about some examples that you have. And at HouseMax, we work with people that flip 2 houses a year or that own 2 rentals, and we work with investors that flip 200 houses a year or own 200 rentals. What's an example of, because you've got a couple of high-level repeat borrowers that are bringing you 3 to 5 loans a month. What is it about the service you provide, and what is it about HouseMax that makes it so easy for those institutional flippers to come back month after month and do loans with us?
I think the biggest thing is I like to look at my job as half lender, half consultant. I have a borrower, shout out to George, who I met in December, who's been doing about 3 to 5 flips per month. And some of them he sells, some of them he refinances and is renting out. And my job there is, again, 2-pronged. Number one, to be the best lender so I can provide him the pain-free process of getting those loans funded. I mean, he sends me a text message. This is the purchase price. This is the address. Same title, same insurance, and we fund them in 5 days. On top of that, to be a consultant, right, to look at the properties that we've closed with already and to say, listen, I think this is the best structure of a refinance that we can put together so we can pull cash out and keep you rolling. He talked to me in December about wanting to close on 40 homes this year. And I think we finished number 27 a couple days ago. Nice. And so he's really chugging along, and him and I communicate all the time. But I think that's where HouseMax's benefit is the most. We're not just lenders. We're able to look at projects, look in that larger scope down the line, and provide some consulting advice to help businesses grow.
Yeah, and I think for those high level, like George, the guys that are doing 3 or 5 a month, it's really important to see transparency in the rates and surety of close. The fact that you've made it so easy for him, I think, Nick, is a credit to you and a credit to the work that the team on the operations side of HouseMax is doing to make sure that we are able to close those loans in 5 days for these repeat borrowers.
Absolutely.
All right, guys, I'm going to throw an odd question at you. We're going to have a little fun with this one.
Okay.
Love fun.
Is flipping more of an art or a science?
Oh my gosh. Is flipping more of an art or a science? I have limited anecdotal data right now doing my first, but I would say it's more of a science. Like, I think it comes down to the numbers, and there's just stuff that you like simply shouldn't do with a flip. Like, just because you like purple walls does not mean your wife also wants purple walls. And I think that if you look at houses on the market across the gamut, there's stuff that like is visually appealing and is like in the now, and that would probably be the recommendation I would have to do a flip. That's the art piece. And then like looking at the comps, like if you are like, this is gonna sell for $900,000. What did that $900,000 house look like? Was it all white? Was it, did it have that like green that's kind of trending and kind of mimicking that? I don't think you have to do anything crazy out of the box where it comes to art. So I'm in the science camp on this one.
All right. So Nick, Aubrey's in the science camp. So same question to you. Is flipping more of an art or science?
I actually kind of agree with her. Just kidding.
What?
Well, here's the thing. I think that the moment that a borrower looks, or rather a buyer looks at a property and says, that's the one I want, is a visual thing. I think like the numbers at that point for them don't matter. And so I think if you walk into a project with the idea of you can feel and sense that there is an opportunity to be creative, to create maybe a slightly different design than one that's in the community, or even one that's similar, I think if you operate with the buyer in mind, I think you're going to find a lot of success there. And now I'm not saying go buy a property that its purchase price is above, right? Those numbers have to make sense. But I think if your first step is with the artistic design behind it, I think you're going to find a lot of success. Sorry.
Great answers by both of you. How about this? Let's settle on
It's both.
the buy is science, the sale is art.
Okay.
Wow.
You're both right.
We gotta
there we go.
We gotta put that somewhere. That was
Yeah,
decent. That was
right?
actually decent.
Well, we gotta ask Jeff about that.
I like that.
I want Jeff's opinion.
All right, Aubrey, Nick, we've talked about a lot of things today, all things DSCR, fix and flip, the BRRRR method. We haven't talked about ground up construction loans, although we do quite a few of those monthly. For investors out there on any of those platforms that are looking to work with you guys, what do they need to know? How can I work as an investor with Aubrey Kozer and Nick Hunt?
You take it away.
If you were to ask me this 4 months ago, I would have said that there's a lot of lenders who hover around the same rate and terms, right? And so to find a lender that's dependable and will work, you need to find one who's able to navigate and pivot the requests of underwriting the best. Our team, shout out Aaron, did a really great job of revamping our process to make it A, super smooth, and B, most importantly, that all pieces of the process fully understand whose job is what. So I think I and Aubrey, but mostly I, understand the process so well that we're able to take loans and really get them across the finish line super well. Now, you asked me today, I think it's still the same idea, but we also really were hit with some great rate drops for our DSCR and our bridge processes. So now we have the ability to pivot underwriting super well, and we also are super suited with some of the great rates. So I think that's one of the main reasons why HouseMax LOs, particularly Aubrey and I, are one of the ones who can bring you to the motherland pretty consistently.
Right on.
Right on.
Right on.
Rocket.
The motherland.
The motherland.
Baby. It's Dockland.
I would say that borrowers probably choose to work with me because in this land of infinite technology and so much AI, I think it still comes down to like people are looking for a connection. And I'm a super relationships based individual at heart. And our company has a KYB motto, which is know your borrower. And that lets me advocate for people to get terms that are technically outside of the box, a little outside of underwriting. Like if a deal is a deal and that person is intrinsically trustworthy and like going to make payments and really wants to do a good job, I think that that's something that you just don't see on paper. So me being able to convey the numerous conversations I've had with people and like sell that vision to ultimately like where these loans like go and get funded is really, really important. And I also understand the value of time. These investors are so incredibly busy. I'm so incredibly busy. We have like, you know, I have 50 to 100 loans going at any given time. I'm pretty much no BS. Like if I say this is how it has to be done, this is kind of how it has to be done. And ultimately I'm trying to save that person time, money, all of the things. So, you know, I'm going to tell you exactly how it is and how we get your loan funded ASAP.
Yeah.
How are you into believing science is most important and art, but you were talking about the art of relationships and I'm talking about the science and process? That makes no sense.
I told you it's the blend of the two. It is science.
We were set up to fail
It is art.
with that question.
You know, it's the same thing in lending, guys. It's in what we do. There is absolutely a science to what we do.
Yeah.
And I love, Aubrey, that you brought up AI. We are using a lot of AI on the processing side of the business. We are not leaning in to technology other than as a medium to be more accessible to our borrowers. We are leaning into a people first, face-to-face meeting. We're dialing back the clock to the way that business used to be done. And that's why the three of us, Jeff and Alex, the two founders, the leadership team, we are on a plane to a different market almost weekly to sit down and have these same types of conversations with our borrowers. And it's been a meaningful transformation for our business and really well received by the investors in these cities that we're going to visit.
100%.
Yeah. You guys, talk a little bit about just working at HouseMax. Nick, I know October 6th is a year for you. Aubrey, you've got a couple years and some change under your belt. You've both done incredibly well. What is it? So talk about, Nick, your first year at HouseMax and the company culture and what that's meant to you.
It's been a whirlwind of learning. I've been in the real estate space before, and one of the things I was nervous about, particularly with sales, is it being very dog eat dog. When I first started and had questions, I had people literally feet leaving the ground to get out of their chair to come help me in an answer. So I think that's one of the benefits here. It's not necessarily that if you're working with one LO, it's only one. If there's any ever question that you have that maybe they need some kind of clarity on, there is literally a swarm of us in an office of 50 who are willing to get out of the chair and jump and help. It's been a very good line of this is what you need to do, but you're treating it as if it's your own business. So you're able to grow it the way that you see that makes sense. And they are, and I'm serious. There are literal Sundays where I'm like, I can't even say, where I can't wait to get to work.
Monday. Come on, Nick.
I listen, I'm telling you. And it's just that when you're in the pace of things, it feels comfortable to have a hand on and just be in the office and just to be with that slipstream. Yeah. And so I've enjoyed it immensely. I'm super excited to see what this year two is. It's already starting with a bang. And October 6th, in a couple days, year two started.
We've done a tremendous job, and it's been really exciting to see your growth and your progress, and one of the true pleasures in the office to work next to you on a daily basis. So, Aubrey, you have an incredible story. You have a degree in molecular biology or something crazy like that, collegiate volleyball player. We're working in the retail space before our co-founder, Jeff, plucked you out of there and said, come give lending a try. Talk about what these first couple of years for you, because you've gone from zero experience in the space to literally one of the top originators in the country. I mean, you're pushing up on, I think, 400 loans already this year, which is unprecedented.
Yeah.
What's the journey over these last couple of years been like for you at HouseMax?
Yeah, I mean, culturally, I think that HouseMax is a really superior space. We care so much about relationships with our borrowers, and I think you feel that being in the office as well. So I know things have changed tremendously since COVID, and like so many people work remote, but I really do love being in the office space and like collaborating with processing and with sales and with ownership about what goes down on a day-to-day basis. So wouldn't change that for the world. But yeah, the last 2 years have been amazing, and I attribute that to how relationship focused we are and how relationship focused I am, and that's really just kind of cascaded the number of loans and the volume and all the things that kind of tend to follow with that.
I think we all benefit from the fact that we work at a company with 90 plus employees that will push up on $1 billion in loan originations this year, and two of the most accessible people in the company are the two founders, who are still very involved on a daily basis, and the first ones that are willing to jump on a Teams call or get in the car and go meet a builder or a flipper at the job site, or jump on an airplane and go meet a group of investors over the course of a couple of days. Talk a little bit about how that's benefited you guys.
Oh, man. I think there are two pieces of it. Number one, it's been so amazing to be able to actually walk some of the projects with the borrowers, right? KYB, Know Your Borrower, is one of the biggest things that we talk about at the office. And you get a sense of how much the borrowers really care and emotionally invest in the properties when you walk them. Like, you see the this was where we ran into this issue, but we surpassed it as a team, and you kind of become and feel like you're on their team as well as them being on yours. Yeah. And on top of that, after you check out properties, there's so much relationship building that happens afterward. Me and Aubrey went to Manhattan Beach in California and played volleyball with one of our borrowers on the sand. Like, that kind of stuff. Yeah. I don't think there are other lenders who are doing that.
We won, by the way.
Oh, well, let's talk about that for 1 second.
Shout out to Lance.
Tired, glance, we got to get a rematch in.
Nick had, in Nick's defense, Aubrey, he had just finished playing in the pro beach volleyball
Oh,
tournament.
yeah. He was fatigued.
I did lose, though. But I've had borrowers come up to me and say, like, listen, you know, I really, really value the relationship that we have, and I just want to let you know that, right? I've gotten cards in the mail, like I've gotten Merry Christmases from some of these guys. I know who's giving birth when, you know? Like, this small thing that started a year ago for me has turned into this really deep pocket of relationships that I have, and that's what it feels like. I'm making friends and also lending money for them to flip, fix, and flip. So
That's great.
It's kind of cool.
That's great. So Aubrey, talk a little bit about the value in the willingness of company leadership from the two co-founders down to jump in a car and go walk a project with you and an investor, or frequently jump on an airplane and go meet a group of investors like we've done in Charlotte and you guys did in Manhattan Beach. What has that meant for you, and what do you think the difference is in terms of how that translates to the borrower experience?
Yeah, I think it just gives that instant sense of connection, because somebody like a Jeff and an Alex, when they go to investor projects or have like these, you know, Teams calls or face-to-face interactions, it's really just saying like, we get it. We've been there. We've been in your shoes. And as Jeff always says, it's not like who are we to each other when things are going really well, but who can we be together as partners when things are less than ideal. That I think those, you know, face-to-face interactions, you just can't replace that, because it's real estate. Like, stuff is going to go wrong and things are going to come up. So I've been able to overcome, you know, so many things that were beyond anybody's control in real estate transactions, because we kind of have this rapport and understanding that, you know, we're partners. Like, we only win if our investors win. So I think that it's second to none. I'm really glad that we do that. And I probably wouldn't be aligned so much with the shop if that wasn't the case.
Yeah, it's a little bit of a been there, done that, right? Scenario with the fact that our company leadership and now Aubrey, you know, we've collectively flipped more than 3,000 homes. So there's not a lot that's going to come across our plate just in terms of issues that arise that we're not going to have some experience in helping navigate our less experienced borrowers through those hurdles.
Yep.
So great job, guys.